You know, in the world of technology, it's incredibly easy to get swept up in the daily headlines. But if you really want to understand where the power is shifting, you have to look deeper. So today, that's what we're going to do. We're going to cut right through that noise and analyze the three core battlegrounds that I believe will define the next decade: the cloud, the software that runs on it, and the very nature of digital assets. Let's get right into it. Okay, before we properly dive in, I have to make one thing very clear. This analysis I'm sharing with you today is purely for informational purposes. It is not, and it should not be considered, investment advice. We are all living through a really profound technological realignment. But the real story, the important story, isn't the latest AI chatbot you see in the news. The true strategic battles, the ones that are going to create and, yes, destroy enormous value, are being fought on three foundational layers: the cloud, software, and digital assets.
We'll start at the foundation, the cloud. This isn't just about market share anymore. No, this has become an arms race to build the fundamental infrastructure for the age of AI.
Now, the common story you'll hear is that this is some kind of zero-sum game, a race where one single company will emerge as the undisputed AI champion. My analysis, however, points to a much more nuanced reality. I'm thoroughly convinced this will remain what I call a oligopoly. That's a market where a few dominant players not only coexist, but thrive, each leveraging their own unique and defensible strengths to capture immense value. And this slide, right here, reveals a critical advantage that I think the market often misunderstands. Just look at the sheer scale of AWS's developer conference: 60,000 attendees. That's triple the size of what Microsoft or even NVIDIA can pull in. Now, this is not a vanity metric. This is a measure of a deep, powerful gravitational pull. Every single developer in that room represents a long-term commitment, a decision to build on the AWS platform, and that creates this powerful, self-reinforcing ecosystem. You have to remember, AWS's core strength is that they invented this market. They are the default platform. They provide the most complete set of what I call building blocks for developers, and they're making very strategic investments in their own silicon, like the Trainium chip, which reduces their dependence on others. Their goal is crystal clear: become the indispensable utility for the digital age, a neutral platform, not a competitor building on top of it. Microsoft, on the other hand, is playing a completely different game, and frankly, they're playing it brilliantly. Their number one advantage is their unparalleled access to the enterprise. They are already woven into the fabric of the world's largest corporations. This lets them bundle Azure services with software that businesses are already dependent on. And of course, their exclusive partnership with OpenAI gives them a potent, ready-made AI offering to push right through that established channel. And then you have Google. Now look, from a pure technology perspective, you could make a strong case that they're ahead of the pack with models like Gemini and their custom TPUs, but their challenge has always been commercializing that amazing tech in the enterprise world. They're fighting against something I call data gravity, the simple fact that once a company's data and its workflows are built on one platform, like AWS, the cost and the risk of moving are just immense. Superior tech by itself isn't always enough to overcome that inertia. So, the crucial takeaway here is this: each of these giants has a distinct and, I believe, defensible right to win. AWS has the builders, Microsoft has the enterprise, and Google has the technology. So rather than looking for a single victor, we should expect a durable polygonopoly, where each of these players extracts just enormous value from this AI revolution. Okay, let's move up to the next layer in the stack: software. With AI now able to generate code from a simple sentence, the big question is whether the entire software industry is facing an existential threat, or is this a catalyst for a powerful new evolution? Think about this for a second. The cost of creating a simple piece of software has essentially collapsed to zero. With today's AI tools, pretty much anyone can generate and deploy a basic application from a single text prompt. This has completely commoditized the low end of the market. We're talking simple browser plugins, basic utilities. That entire category of software is now staring down the barrel of an existential threat from instant, free competition. But, and this is a huge but, there is a critical trade-off. While it's become incredibly easy to create something, it's still very difficult to create something reliable. AI-generated code, well, it's often buggy. For a simple task, that's just an annoyance. But for essential business operations, that is an absolutely unacceptable risk. And this brings us to the whole concept of mission-critical software. What are we talking about here? We're talking about the systems that run a company's finances, that manage its global supply chain, or control core industrial processes. In these areas, failure is simply not an option. You are not going to risk your entire business on some new, unproven tool that was coded up by an AI.
So where is the value going to end up? Well, I see two places. First, with the incumbents who have these deep, proprietary data moats. Think about a company like SAP. They aren't just selling software, they are managing the literal lifeblood of corporate supply chains. They can then layer AI on top of that unique data to create insights a startup could never replicate. And second, the vertical market specialists. Companies like Constellation Software that just dominate niche industries. Their defense isn't just their code, it's decades of domain expertise and deep customer trust. For them, AI is a powerful tool for evolution, not some overnight disruptor.
All right, finally, let's pivot to our third battleground, the evolution of digital assets. And here, we're going to focus on the maturing institutional investment thesis for Bitcoin as a modern store of value.
To really understand the thesis here, we have to start with a sense of scale. The current market value of Bitcoin is hovering around $1.8 trillion. Now, that's a significant number in its own right, making it one of the largest financial assets on the planet.
But now, compare that to gold, the world's oldest and most trusted store of value. The total market for gold is estimated at around $29 trillion. And this simple comparison right here is the entire institutional thesis in a nutshell. If Bitcoin manages to capture even a fraction of gold's role, the potential for appreciation is substantial.
You see, its core attribute as a store of value is its verifiably strictly limited supply, which is something it shares with precious metals. This makes the thesis almost self-fulfilling. Its value as a store of value becomes directly proportional to the number of significant financial institutions that decide to treat it as such. As each new institution comes on board, the network effect strengthens and the thesis just becomes more and more robust.
And we can actually see this progression happening right now, in stages. It started with the early adopters, the hedge funds. Then, we saw major banks start to accept it as collateral for loans, which is a massive stamp of approval. The approval of regulated ETFs then opened the door to a much broader base of investors. The final and most significant milestone, of course, would be adoption by central banks as a reserve asset.
And this, right here, is the critical data point. Central banks, the most conservative investors in the world, hold roughly $4.5 trillion worth of gold in their reserves. Their allocation to Bitcoin today? It's effectively zero. You don't need some complex financial model to understand what happens if even a tiny fraction, let's say just 1%, of those reserves shifts over to Bitcoin in the next decade. The impact on its valuation would be profound.
So, let's bring all of this together and summarize the key strategic insights from our analysis of these truly tectonic shifts.
First, in the cloud, stop looking for a single winner. The future is a oligopoly where AWS, Microsoft, and Google all thrive by owning different parts of the ecosystem. Second, in software, AI is really separating the wheat from the chaff. Simple tools are becoming commodities, while mission-critical software with deep data moats and customer trust is becoming even more valuable. And third, the story of Bitcoin is evolving from a retail phenomenon into a potential institutional-grade asset.
We are witnessing a simultaneous reshaping of infrastructure, applications, and assets, the very foundations of our digital economy. So the most important question for you isn't who's going to win next quarter. It's how do you position yourself for a decade where the pace of this structural change is only going to accelerate? Thank you for your time.